Hello guys, JD and Tencent just released the latest earnings report today's morning, and in this video I will give you my opinion about this latest report, my opinion on JD and Tencent as a company and as an investment, and I will give you the key takeaways about what happened in the last quarter. So if you are on an holiday or in vacancies and you don't have time to read the latest earnings report, this video is for you. I will give you my opinion and the key highlights that I see in this latest report. So, full disclosure, I do own JD and Tencent. It's one of my favorite companies, one of the biggest companies on China, and you might see a bias on this video, but I will give you my honest opinion on that. So, first, JD. I just read the report, and the highlights is that don't look into what the stock is doing now, but let's focus on the report. Net revenues. Their revenues are up 7.6% compared to the same quarter last year. In my opinion, it's really good. JD is not a high fast grower as it was in the past, but growing 7.6%, it's really good. It's not really good, but that's a strong report, in my opinion. Bear in mind, Chinese companies are having a really bad year and now are recovering. This year is all about the recovery in the Chinese economy, and even though there is a lot of expectation around the Chinese companies, this is a really good growth, especially when you look into all the news that are being here that the economy is stalling, they are not going as fast as expected, but this is a turning point. They are growing. If you look into the net income, it's up. Let's see, it's up a lot. I do believe it was around 30% more that when it compared to the last year. They are growing. Their profits, their margins are recovering for their normal values since we had a really bad year last year. It's normal that their margins are lower than the full potential this company has. So, look into the highlights that we see. It was really good. I've read all the reports. Their free cash flow is up a lot from last year. You should look into it. They earn a lot more profits and free cash flow when compared to last year. Their revenue is still growing at a good rate, 7.68%. It's really good for a company with the size of JD. They are continue to invest. Actually, their revenues and their profitability, it was ahead of what the expectations were, so that's good. I know that the expectations of this report was really low because of all the problems we are seeing in the Chinese economy, but never mind. It's a good report in my opinion, and this looks like JD is on good track. Continue to growing. Margins expanding to normal values, profits and free cash flow increasing. So that's something I really liked as an investor. So, and when I looked into it, the stock market, the stock now it's only down 2%, but 1 minute ago the stock was down pre-market around 5%. I don't know, maybe investors are looking into it and starting to think that it was not a bad report. In my opinion, it's a good report. It's not an exceptional report, but this proves JD is in a good path. So, in my opinion, it was a okay report. As an investor, that was something I really like to see. If their revenue was not growing or their profits are still low, that if I see that, I will be worried. So, but since we have really good growth expanding margins to normal values, I'm really happy to with this report. So I do believe in the future. I think I still want to own this company. So I read the Tencent report as well, but it was a little different. They are doing some cost cuttings, trying to increase their earnings, but their revenue grow a lot. I do believe they grow around 11% year on year. Their profits, it was not a bit. The expectations of their earnings were to be 33.4 billion yuan, and they just reported 26.17 billion. But even that miss, it was a 41% rise year on year. So it was a good report, a solid report, and Tencent is down, for example, 1.4%. Uh, it was not a bit on profit, but Tencent is still one of the best business models that we can find on China. I do really like Tencent as a company. That's a different company than different from JD, for example. I do like that two company, and since I'm bullish on the Chinese economy, I tend to own a lot of Chinese companies. I do own Alibaba, Pinduoduo. That's my two favorite, but I still own JD and Tencent. It's a smallest position of mine, both. But I do really like them as a company. And when you look into JD and Tencent, that's two different companies. I do own JD because I do feel they are really undervalued at the moment. My intrinsic value, as I've talked, it's around 43, 44, 45 dollars now, but this is a really conservative analysis. I have a really high margin of safety because I know that investing in China it's really risky, and I do want I prefer JD. I do prefer Tencent as a company. There are high margins, for example. When you look into Tencent, for example, I have a quality score for Tencent as a 69, and JD it's only a 48. Bear in mind, JD it's a really good company, but it's an e-commerce company. They are lower margins. The return on invested capital are lower. They have a narrow moat, but they are really undervalued. They are distributing and returning capital, doing dividends now. When you look into Tencent, they are doing the same, but they have a bigger moat, really low debt, still growing as well. Really good market. That's a really good business, and my opinion, my intrinsic value for Tencent it's around 39, 40 dollars. Now they are trading on. That's my mistake. It's not $39. It's 39 euros, around 40 euros, and I do own Tencent in the Frankfurt exchange, and they are now trading around 37 and a half euros. So it's close to slightly undervalued, close to the fair value, but I do still want to own Tencent. And in my opinion, when I look now into JD and Tencent, they are still good opportunity, but I would like to increase my position in Tencent because I do really like their business model, but I do want to really find Tencent shares at a really small lower value, because I do want to own Tencent. I want to buy Tencent really undervalued. JD is still really undervalued, but it's still a full position of mine. I do not want to increase my position, but for me, both companies still hold. I do really like. I do believe if you invest in both companies, you will have good returns in the future. I do like them as a company, and this latest report was not really good, but they were good reports. They are in a good track. I do believe in the future they will get better and better as time passes, and I do believe as a shareholder of both companies, I do believe they will turn to be a really good investment in the future. So, and in my opinion, should be increasing position. Maybe if you not on a full position. I do really like these two companies. The report was good, but we are in a good track. Um, we'll see revenues still growing, their profits and margins increasing. So that's why we want in this company. So that's my opinion, my earnings opinion from JD and Tencent. I hope you liked it. I hope you find it useful. And if you like, please subscribe, guys. Bye.